Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey everybody, today we are going to be talking a little bit about this deal that was announced today between Dominion Energy and SCANA. SCANA, of course, is the South Carolina utility, and they have a lot of gas assets and electricity assets. What SCANA also has are two very large, very expensive, and very incomplete nuclear power plants. What they did for this was they actually increased prices for their customers and said that these nuclear plants are going to be fantastic and reduce prices for utilities and electricity consumption over the next number of years. Unfortunately, cost overruns and regulatory issues meant that this did not come to fruition. So SCANA has actually been a fairly poor performing utility despite attractive demographics in South Carolina with the growth of the population there. So today, Dominion, which is the utility in Virginia, they also have a lot of natural gas assets, they have a lot of pipelines, and importantly, they just opened the first LNG plant on the East Coast at Cove Point in Chesapeake Bay. And what this does is it takes all this natural gas that you're producing in the Marcellus and the Utica plays up in Pennsylvania and Ohio, and it's taking this natural gas through Dominion pipes largely and funneling it to this Cove Point LNG liquefaction terminal where they're liquefying this gas and taking it to places in Japan and India. They have totally used all of their offtake agreements. 100% of that gas is going to be shipped through the Panama Canal, the expanded Panama Canal, to Japan in 50%, and 50% is going to go to GAIL, a very large natural gas company in India. So that's Dominion, that's SCANA. Dominion's about a $60 billion company, SCANA's about a $7 billion company. Before today, SCANA was a $5.5 billion company, and Dominion comes in and says, we're going to actually pay a 44% premium for SCANA. Now, this seemed extremely expensive. They have this nuclear overhang. It's not something a lot of companies would want to touch, especially if you're in a situation with like Dominion is, who's been spending all this CapEx over the last number of years and actually is in a negative free cash flow profile as a result of these capital expenditures. You want to be acquiring SCANA from a position of strength, and Dominion is not perceived to be in a position of strength. But their leader, a guy by the name of Tom Farrell, is an empire builder. He is incredibly ingrained in all the Virginia legislature. He has relatives in various seats, and he essentially owns the state of Virginia. He can do pretty much anything he wants there. South Carolina may be a little bit of a different story, but he is a power broker. A classic power broker. He emphasizes influence, and that's how he has built his empire and his monopoly in Virginia. So he comes in and says, we're actually going to acquire this. We don't need shareholder approval for it. It's going to be a stock-for-stock deal. So that means that they will buy SCANA, the South Carolina utility, for only the only consideration is going to be in Dominion stock. So at the end of the day, SCANA will own about 0.13, about 13% of the combined company, and Dominion shareholders will own the rest. And as a result of this larger company, Dominion says, we can more rationalize our how we distribute the electricity. We'll have synergies from the natural gas pipelines, and importantly, expectations for SCANA are much lower than we, Dominion, think they should be. So Dominion actually says that based on their estimates, the multiple that they're paying for SCANA is actually not that high, and that the street estimates, the analyst estimates for SCANA were actually too low. And so this is actually a fair price, even though it seems fairly frothy. What Dominion is also going to be doing is they don't want to acquire the headache of all this nuclear stuff. So they've quite creatively gone and said, we will give every SCANA customer $1,000 up front, $1,000, and we're going to cut their bill by 5% on average. That's pretty attractive, and all of a sudden it makes the argument to regulators seem, it puts them in a little bit of a bind because they want to get their pound of flesh for the nuclear issue. But Dominion's coming in and saying, hey, we're going to give all these people all this money if you let this nuclear issue kind of go away. And by the way, if you don't agree to those terms, we're just going to pass on the deal because we have great prospects. So this is a great opening salvo from Dominion. They sound like they're not ready to negotiate. And I think that the market right now is a bit of a case of fire, ready, aim. They saw this availability bias. They know that SCANA is tied to these problematic nuclear issues, and they don't like this deal. But I think if you read a little bit more into it, you'll see that the nuclear is an issue, but Dominion is making sure that is ring-fenced before the deal is consummated. And by the way, if this deal actually goes through, you're going to see EPS, instead of growing from between 6 to 8% a year through 2020, you're going to see EPS grow above 8% a year through 2020, all the while increasing dividends by 10% a year as a result of the lower CapEx and higher free cash flow. So that's the story for Dominion. It's the story for SCANA. We'll see if this deal actually closes. Right now, it's trading at about a 7% discount to the deal price, which implies it's probably about 80-85% priced in right now. So there's a little bit of an arbitrage play there, a little bit, but the downside is significant if the deal does not go through. You're talking about 30% downside. The deal should go through by end of Q3 2018, so this year. So stay tuned. We'll give you updates as needed. Thanks.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.